this session, we're going to get familiar with how to place orders and even how to manually enter buy and sell trades. So, as we said, the market we're going to work in is a two-way market. By two-way market, we mean a market that moves in both directions. That means we can both enter buy trades and also profit from the market's decline. We can enter a sell trade and profit from that as well. Well, as many people know, buy means to purchase, meaning we can buy a commodity or a currency pair at a lower price. It goes up and we profit from that increase. But for many people, the definition of sell isn't clear. What does sell mean? How can a price drop and we still make a profit? Right now in the Iranian stock market, many people see the market falling and they're losing money, and they don't know how a market downturn can actually be profitable for them in the financial market. Today, we're going to shed more light on the markets where we can profit from selling. We use the buy option to make purchase trades and the sell option to make selling trades. But the sell option doesn't actually mean selling an asset. Friends, what does it mean? Either we're buying one asset in exchange for selling another. This is basically how it works in currency pairs. When we say euro to dollar and we hit buy on your USD, it means we're buying euros. We're selling dollars because we're trading the value between these two. And when we say we hit sell, that's exactly what we're doing. We're buying dollars and selling euros because, again, we're trading their value. In the next section, we'll get more familiar with this topic. So what do we mean by currency pairs? When we say euro to dollar, guys, always keep this in the back of your mind. For all currency pairs and commodities, we've always said that when reading the Forex name of a currency pair, now whether it's a major, a minor, or any other type, what do? We read it like this. We say euro to dollar. Again, pay attention to this. Here it is, euro to dollar. Basically, this is the main idea, or this separator is like a fraction line. This way, it's much easier for us to proceed. What does that mean? It means we say euro divided by USD, the dollar. Well, when we look at it as a fraction, the whole thing changes a lot because it becomes a simple fraction like what we learned in 5th grade, and it's easier for us to understand whether our chart is going to move up or down. It becomes simpler for us. How do we understand it? Guys, imagine that the value of the euro is, say, 10 right now. What's the value of the USD? 2. So what does this fraction become? It becomes 5, right? When does this happen? This chart works with the result of this fraction to determine whether it should go up or come down. Now, for example, when the euro, which is in the numerator, increases in price, let's say the euro becomes $20 while the denominator remains 2. So what does our fraction become? 10. Why? Because our fraction gets bigger when either the numerator increases or the denominator decreases. Let's continue. Let's give an example of the denominator getting smaller. For example, let's say the numerator stays at 10, but the dollar in the denominator goes from 2 to 1. So what's the result again? 10. So either our numerator increased or our denominator decreased. In both cases, our result increased. From 5, it went up to 10. So here, that means, look, it's written here in the expansion. Do you see? If the euro increases or the dollar decreases, the EUR-USD chart will rise and move upward. And in this case, we are said to participate in a buy or purchase or demand position. Okay? And exactly the opposite is true. If we want to say that the result is 1, it becomes smaller very easily. Either the numerator has to get smaller or the denominator has to get bigger. In these two cases, does the result get smaller? We said this result is the trend that our chart is going to follow, whether it goes up or down. Now let's write. If the euro gets smaller or the dollar gets bigger, right? That means it loses strength. The euro to dollar chart will drop. Let's bring up this example. Let's go over it together one more time here. We said to look at all currency pairs as a fraction line, right? In a currency pair, the one we mentioned first, like euro to dollar, the one we say first goes on top. So, in short, that's what we say. Euro 2 becomes a fraction line, dollar or USD. The second one we mentioned goes in the denominator. Euro to dollar, pound to dollar, or for example, USD, CHF. There, the dollar goes on top. CHF goes in the denominator. So for all the currency pairs we read, whichever currency we say first is the numerator, after the fraction line, the second one is the denominator. When we write this as a fraction, we said if the result of the fraction increases, what does our chart become? An uptrend. If the result of this fraction decreases, what does our chart become? A downtrend. Now we said that either the chart moves upward. At times when it rises, it's because either our numerator, which is the euro, strengthens against the dollar, or our numerator. If the euro stays the same but the USD, which is our denominator, weakens, then again the result goes up. These are the two scenarios for the price going up. There are also two scenarios for it going down. What can make the result of a fraction decrease? When we write euro over USD, what happens is that our numerator decreases. The value of the fraction gradually starts to become much smaller. Or, again, if we express the exchange rate as euro over USD and the value of our denominator increases significantly, then the chart also moves downward. These are the two scenarios when our trend becomes bearish. Here, what is the trend? It's bullish. In these situations, we participate in what's called buy, and in the others, we participate in what's called sell. Now that we've simplified things this much, so we understand that when a news report like employment, or when we talk about fundamentals like interest rates or anything else, comes out in a certain way, if this price strengthens the dollar, we know, guys, that the euro will drop against the dollar. And when we know that something really good happens in the European data, so for example, they might lower the interest rate a bit to help the economy. They're strengthening the euro, so we know that the euro will rise against the dollar. Its chart in the fundamental analysis section is entirely based on the details of every single report, every meeting, every conference, and so on. We even discuss hot news and the latest models of fundamental analysis calculation in this chart. All right, let's get back to it. So up to this point, we've understood how to calculate a currency pair. And based on that, we can tell which direction its chart is heading. There's also something else I want to point out here. We said that in a buy trade, the first currency is always bought and the second one is sold, right? So what kind of trade is this? It's a buy. But in a sell trade, what did we say happens? We sell the first currency and buy the second one. Now, understanding buy and sell trades should be much easier for you. Why? Because we've understood how you can profit from a sell or how you make a profit in a buy. In a buy, okay, we buy euros and sell dollars. Now we know that. When important news is coming out about the dollar or about the euro, we need to know which direction to enter the trade. Based on the analysis we do of that news, we need to be completely confident about the buy and sell issue here. Guys, when we want to take a buy position, we said what happens to the EUR-USD ratio? Which way does it go? What is supposed to happen to the EUR-USD ratio? It should go up. And when do we take a sell position? When the EUR-USD ratio goes down. Now, the way EUR-USD goes up on the chart, as we said, is either the euro gets stronger or the USD gets weaker, which causes EUR-USD to rise. Or when we want to take a sell position in order to enter a sell trade and for the EUR-USD chart to go down. Either the euro has to weaken or the dollar, which is in the denominator, has to strengthen so that the EUR-USD chart, which we wrote as a fraction, drops. Many people still have issues with the concept of selling. Let me explain. Let me give a very simple example to clear this up as well. Let's see what this means. I want to explain buying and selling trades using the broker's leverage. Let me draw it schematically for you on the global gold ounce chart so we understand how we profit from a buy and how we profit from a sell. Okay? Imagine this is our broker here. So, what's happening with the broker we have here? Inside its vault. This is the broker's vault in our gold ounce example. It features both gold and cash. Where exactly is this place? This is known as the local market. This is the market. Now in Iran, imagine this is, for example, The Grand Bazaar of Tehran. Well, in the Grand Bazaar of Tehran, there is both gold and there are buyers and sellers. Anywhere that buyers and sellers gather together, it becomes a market, right? Now, what happens? Let me start with a buy example, so it'll be easier for us to move on to the sell example afterward. I predicted that the global gold ounce, for example, or actually not even the ounce, just our own gold here. What's going to happen to gold? Is it going to get more expensive? Very simply, I call up, well, I'm just giving examples here, but of course, we don't actually call anymore. We set our order on the system in a way that I'll explain in the next section, either as a pending order or a market order. But now, I want to tell a story so we can think about it and resolve this issue. In the story, the trader keeps picking up the phone and making calls. He tells the broker his analysis. What was it? That the price of gold is going to go up? So, Mr. Broker, I want you to buy some gold for me. For example, 10 grams. That means take your money and go buy it. In the market, let me write it here. We want to make a buy trade. The definition is take your money. How much are you saying? For example, you say, how much is gold per gram right now? You say it's 1 million per gram. So for 10 grams, that's 10 times 1 million, 10 million. Take 10 million from your money. That's what we're doing here. We say, take your money, go to the market and make the purchase for me. Execute the buy from your money. How much volume? What lot size do we see in the market? Lot size, in our example, in the story you say, how many grams of gold should I buy? He tells me buy 10 grams for me and he goes and does it. The 10 grams of gold, with each gram currently priced at, say, 1 million, means he buys 10 million tomans worth of gold for us. He buys 10 grams of gold. Guys, did you understand what just happened in this example? The broker took money from his own funds and went. In the market, he bought 10 million tomans worth of gold for us. So now we have 10 grams of gold. How much money did the broker pay for these 10 grams of gold? At 1 million per gram, he paid 10 million tomans for this gold. Now, our analysis was that gold is going to get more expensive, and gold does become more expensive. Gold goes from 1 million per gram to 1,500,000 tomans per gram. This is just an example. Well, now we have 10 grams of gold, the 10 grams that he bought for us. The 10 million became 1,500,000 tomans per gram, so its current value is 15 million. So our analysis reached its goal. Our analysis is that if it's going to reach 1.5 million per gram, now we make a call. To the broker, dear broker, the 10 grams of gold you bought with me at the price of 1 million per gram became 10 million. Now sell it and deposit my profit into my account. So the broker takes the same 10 grams of gold again and comes back. He sells it in the market exactly as instructed and says, well, I had put down 10 million tomans for this customer to buy these 10 grams. He takes the 10 million and puts 5 million back into his treasury. Here the profit difference is another 5 million, so we made a 5 million profit, and he deposits this 5 million into our bank account as well. Is this clear? In this buy transaction, the broker bought 10 grams of gold for 10 million tomans at 1 million per gram. When the price hit 1.5 million, we had him sell and deposit our profit. He sold the 10 grams. He takes back the 10 million he had put in, and the 5 million profit we made is given to us. So this was a buy, long transaction. It was in the direction of the trend, profitable, and a purchase. Many times, we've done this ourselves. For example, we bought something and sold it at a higher price, making a profit from that price increase. But now, how does the story of sell work? This is where a lot of people get confused. So now, let's shift our focus and consider what exactly we should do to take a sell position in this market, and how does the profit from a sell trade actually work in practice. To understand this clearly, let's first erase everything that happened with the previous buy example and go back to the beginning. Once again, imagine we are looking at the brokerage interface where we have our capital ready. We are actively participating in the live market, and there are many other buyers and sellers interacting all around us. And sellers. All right, now we want to see how to make a sell trade together, or how do we make a profit from selling. Let's go back to that traditional example we were using where we talked about an ounce of gold, or even the same gram of gold we were using as an example. Now it's reached 2 million tomans, and we've analyzed that this 2 million tomans is really a high price right now for each gram of gold. And our analysis is that each gram of gold is going to reach 1,500,000. How can we profit from this price difference in the market? This time we call the broker and tell them that there's no need to bring money to buy gold for us anymore. Now we've analyzed that the price per gram of gold is very high and it's going to drop, so we tell them to take 10 grams of gold from our treasury and sell those 10 grams of gold in the market. Here's an example of this. This example is called a sell example. What does that mean? It means this time sell the 10 grams of gold, each gram now worth 2 million, which totals 20 million tomans. Right now in the market, the broker takes 10 grams of his own gold from the treasury and brings it in for us. He sells the equivalent of these 10 grams in the market at 2 million tomans per gram, and now he has 20 million tomans in hand. According to our comprehensive market analysis, the price of every single gram of gold has dropped from 2 million down to 1.5 million. So now each gram is 1.5 million. Our analysis was correct. Now, what is the actual value of 10 grams of pure gold? It is currently worth $15 million. Toman. Now we call the broker and say, hey broker, back then we told you to sell 10 grams of gold at 2 million, and now you have 20 million in hand. He says, okay. We say, now go to the market and buy the equivalent of 10 grams that you took from the treasury and buy them again, put them back in their place. Now the broker goes to the market and buys 10 grams. He buys his own gold at the price of 1,500,000 per gram, and with 15 million tomans, he puts those 10 grams of gold back in their place. So how much extra money does the broker have left? He had received 20 million from selling the 10 grams. He used 15 million of it to buy 10 grams and put those 10 grams used again in his own treasury. Again, here there's an extra 5 million left over. This 5 million is the monthly profit and is deposited into the bank account. So we saw that. How does the brokerage mechanism work? Did we take a buy position? At that time we told him the price is good, take the money and buy gold. When it got expensive, we said, now sell the gold, put your money in and deposit our profit. Now that we saw gold is very expensive, we said, take gold from your treasury and sell it. The transaction was done at the price of 20 million. The analysis was that each gram of gold was supposed to reach 1.5 million, and those 10 grams bought at the price of 1.515 million per gram. He put his own gold in his treasury, and the 5 million difference from this drop in price, which was our profit, would be returned to us.